What's up, family? The 2025 tax landscape is about to change dramatically. We're talking about potential corporate tax rate drops, crazy depreciation changes, and elimination of major tax deductions and proposals that could revolutionize how we do business in 2025. If you want to stay ahead of the game and keep more money in your pocket, you cannot miss today's episode. And make sure you stay to the end, because I'm going to be breaking down exactly what every business owner needs to know right now in order to maximize tax savings in 2025. Let's get it. Ready or not, 2025 is here, and there are some major tax changes that's going to take place this year. On top of that, we have a new president, Donald Trump, in office, who wants to add more radical tax changes on top of the current tax laws we already have. So the way I'm going to do today's episode is I'm going to first tell you about the current law changes that are in effect as of today, and then I'm going to tell you if Donald Trump is planning to change those this year with his new tax proposal. Okay, so the first thing I want to discuss is tax deductions for startup cost. Now, I know at the end of last year, there was a lot of talks about a potential $50,000 tax deduction for startup costs for small business owners. And I want to tell you that as of today, that is not in effect, okay? Startup costs that are tax deductible for small business owners in 2025, you have a $5,000 tax deduction for startup costs and another $5,000 tax deduction for organizational costs. Now, that's $10,000 and tax deductible expenses combined, which is still great, but it's not $50,000. So if your startup costs to start your business in 2025 exceed $10,000, it doesn't mean you don't get to take the tax deduction. You're just limited to only taking $10,000 this year. Now, again, if you want to take these deductions properly, you need to document everything and organize everything so you can legally take these deductions. Okay, that was number one. Number two, we're going to have some major changes to depreciation this year. Now, unless you've been living under a rock, right, the depreciation deduction has been going down by 20% since 2022. And as of last year, we were only able to take 60% of bonus depreciation for equipment, for vehicles, for buildings. And now in 2025, it drops from 60% down to 40%. So if you are a small business owner that bought a car that weighed over 6,000 pounds, right? If you bought it last year, you would have got a $60,000 bonus depreciation. But as of this year, you only get a $40,000 bonus depreciation, which is a big deal for a lot of small business owners. Now, here's what I will say. With Donald Trump being in office, he has vocally mentioned that he wants to get the bonus depreciation back up to 100% as quickly as possible. Now, in my opinion, I do believe that by the end of 2025, bonus depreciation is going to be higher than 40%. Now, is it going to be back at 100%? I don't know. But I am confident to say that by the end of this year, with Trump being in office, I severely doubt that bonus depreciation doesn't get a huge bump. And we can pray that if it gets back up to 100% bonus depreciation, that is going to be huge for small business owners everywhere. But again, as of today, 2025, as of this recording, bonus depreciation is only 40%. So make sure you calculate that in your tax planning this year. Now, number three is huge, right? Because one of the biggest tax changes for small business owners in recent years, at least from in my opinion, was the addition of the QBI deduction. The QBI stands for Qualified Business Income Deduction. Now, this was a 20% tax deduction that small business owners got just for being a business owner. Okay, so if you had $100,000 net income in your business, you will get a $20,000 tax deduction just for being a small business owner, right? This is one of the best tax changes that small business owners have seen recently. And that QBI deduction is set to expire at the end of 2025. So if nothing else changes, this will be the last year that we are able to take the QBI deduction. Again, with Donald Trump being in office, I doubt this expires because he is the one who instituted this back in the 2017 Tax Cuts and Jobs Act. So do I think that it's going to get extended? Yes, but if it doesn't, this could be huge for small business owners. And quick story here, because one of our clients came to us, I think it was in 2023, and part of what we do in our company is we review our new clients' prior year tax return. And one thing that we found is that their CPA missed adding their QBI deduction to their tax return for 2 years. So this ended up costing them, I think, around $50,000 in missed tax deductions. So please, guys, double check your tax returns for last year and when you file taxes this year to make sure that your current accountant did not miss out on this QBI deduction, because this is huge for small business owners everywhere. Now, let's talk about the standard deduction, because in 2025, we actually seen an increase in the standard deduction amount from $14,600 to $15,000 for small business owners, and from $29,200 to $30,000 for married filing jointly. So if you are filing taxes this year, you will see that 2025, you'll get a $15,000 standard deduction and a $30,000 standard deduction if you're filing married filing joint. Now, what does this mean for you? Number one, it means that the more the standard deduction increases, the less people are going to itemize on their tax return. So it's good. It's just an increased deduction for us. But what it means for small business owners is it means that because the first $15,000 that we earn or that our kids earn is not tax deductible, it's not taxable because of the standard deduction, what that means is we are now able to pay our kids up to $15,000 in 2025 from our business to pay our children, and our kids will not have to pay taxes on that $15K. So now we're able to actually pay our kids more from our business, and that money will be 100% tax-free to them. So one of the things that we're telling our clients is that in 2025, we're going to increase your kids' payroll in your business from the $14,600 that it was last year to $15,000, so that we can increase the tax deductions in their business and also increase the amount of tax-free income they're able to pass down to their children. Again, some great tax changes for us going into this new year. Now, the next thing I want to talk about is the increase in the contribution amount to small business owner retirement plans. Okay, so if y'all have listened to me for any amount of time, you know that my two favorite retirement accounts for small business owners, number one is a solo 401k. Number two is the SEP IRA. Now, both of these in 2025 have had their contribution limit increase to $70,000. So you are able to contribute $70,000 into this plan. And if it's a traditional plan, that means you get a $70,000 tax deduction for contributing this money. If it's a Roth plan, that means you get to contribute this $70,000, and that $70,000 will grow tax-free forever. So if you're a small business owner, you don't have a small business retirement plan set up yet, this is your reminder to get it set up as quickly as possible so you can contribute up to $70,000 this year. So those are the major tax updates that have already been passed, okay, that have already been installed. Now, these next tax law updates have not been passed yet, but I still want you to have these on your radar for 2025. So the first thing I want to talk about is the corporate tax the corporate tax rate potential cut. So currently the corporate tax rate is 21%, but Donald Trump mentioned over and over again that he wants to get this cut to 15%. That will be a 6% change in tax rate, which could be absolutely major for small business owners that are earning $1 million, $2 million, $3 million, like some of our clients. So if you're earning $1 million, that is a $60,000 difference in your tax bill for 2025. So the reason that this is really important for me is because if this is passed, it's going to change the recommendations that we give our clients. Like, should they be an S Corp or should they be a C Corp, right? Because for a 6% change from upgrading from S Corp to C Corp, that could have a major tax implication, and it might change some of the recommendations that we give. So stay on the lookout, because if it gets dropped from 21% to 15%, I'm going to be giving different tax recommendations, and your CPA might be giving different tax recommendations as well. Now, last but not least, let's talk about the potential elimination of taxes on tips. So we saw that Donald Trump mentioned that he wants to eliminate taxes on tips for all hospitality workers. So this is if you work in a restaurant, if you work at a bar, or if you get tipped in general, you won't have to pay taxes on the amount of money that you get tipped. So for small business owners in the hospitality industry, this could be huge for you for how you attract and acquire talents in your business, because they won't have to pay taxes on majority of their income, right? Some people that work in bars, 70 to 80% of their income come from tips. Like, that could put a lot more money back in their pocket if they don't have to pay taxes on that money. So these are the major changes for 2025 that I want you to keep on your radar, because if you want to build wealth in your business the right way in 2025, it's not just about how much money you make, it is about how much money you keep. And these tax changes will help you keep more in 2025. So if you enjoyed today's episode, please hit that like button, smash that subscribe button, and check out this next video that's on the screen, because this is also going to give you some key things that you need to consider in 2025 when it comes to saving on taxes. Until next time, peace.